Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is Polestar Automotive, ticker symbol PSNY. And so here I am recording this on Wednesday, April 10th, after the market has closed, with Polestar closing at a price of $1.59, being down just over 3.5% on the day, but being up about 1.25% in the after hours, right now at about $1.61. And so, I have not added any lines to this chart because I do think something pretty interesting has been going on with the stock price. And, so I will go over what I think about it. But unfortunately, I do think it looks fairly bearish. I do think that price could be going lower. But at the same time, whenever I do feel pretty confident about something going one way or another, oftentimes I am surprised. So, I do think it will be good to pay attention to some of the levels that I do go over, but also, just you got to be paying attention to the daily candles and seeing where the closes are, because I do think that is key. And so if we do look at the closes, starting with the upside, we can see that we have not been able to get any closes above the 50% retracement from this Fibonacci here. And so this one is at a price of $1.73.5. We did get some wicks up to that level, which unfortunately it looks like it formed a double top with these two wicks up here. And the highest close that we were able to get was hit on April 8th, closing at a price of $1.68. And so, that's pretty far from the 50% level, and it really just has not been showing a lot of strength getting up to that level. There just aren't buyers stepping in. And so I do think that price could be heading lower, even from the current price of $1.59, which does happen to correspond with this previous low that was hit on January 16th, marked by this orange line here. And one thing that I do find really interesting about the chart, I did leave the 786, 618, and 50% levels from this retracement up, and it does look like they have served as good levels to be trading off of, because on March 19th, we did cross below the 786 at a price of $1.48.6, hitting a low on the day of $1.48. And then just about a week later, we crossed over the 50% level. And so that would have been a pretty nice swing trade. If I do get a measurement of that, that represents a 16, almost 17% swing. So pretty nice there. And then following that, we did see another retrace to that 786, and that represents a drop of over 14.5%. And so, could have made some money on the short side there. And then again, as you might expect, we did go back up to that 50% level. And so with that being said, with buyers not stepping in above that level and us not even being able to hold the 618 at $1.63.2, I do think we're probably going to be testing the 786 again. And when you do test a level multiple times, eventually, it's going to break. And let's see here, the high on March 25th was $1.76. The high from yesterday, April 9th, was $1.77.5. So I guess I do find it encouraging that it was a higher high there. But, we couldn't get a higher close. So I do think we will be retesting the 786. And so I would be looking we do not want any closes below $1.48. Because, I think just thinking about that as a round number, forgetting about $1.48.6, $1.48, if we get a close at or below that level, I do think that would be bad. And also this low here on April 2nd was $1.48. So getting a close below $1.48 could be the start of confirming a breakdown from this level, and that we could be then doing a full retracement to $1.30. And so if we get one close below 148, maybe it's a fake out. Really good to be waiting for a second confirming close. If that close is below that new low in this consolidation pattern, then I would think that we are heading down to $1.30. And also on the note of this being consolidation, while we did have some big moves to the upside here, this consolidation has been forming following this down move. And so I do think this could be a bear flag, and I do think that this could be dropping perhaps lower than $1.30 potentially to test this downtrending white line that has marked these lows here, as well as effectively marking the bottom of the shaded channel that I have drawn here, which we are currently above the midpoint of right now, but we could be breaking lower and potentially getting down to, $1.13, where this 1618 extension is from this orange retracement. That may correspond. Actually, breaking below that would correspond with testing this white downtrend, potentially getting down to right around $1 a share. So I do view that as likely. Just how we saw consolidation here after we had this down move, we saw another down move. As we see this consolidation here after this down move, I think we may be seeing another down move. And this down move over here did test the bottom of that channel, testing that white downtrending line. So if we do see that again from current price, testing that downtrending line could represent a downside move of 35%, perhaps 30%, but perhaps more than 35. So I do think that is something good to be preparing for if in case that does happen. Always good to have a plan for it. And yeah, but if it does break to the upside, if I am wrong about how it does look bearish and it does go higher, really we just need to start seeing closes above yesterday's high, which was $1.77.5. So if we get a close at $1.78, I'd look for a secondary close just higher than that day's high. And that could suggest a confirmation of a break to the upside above this 50% level, and then look for a break above this downtrending purple line, which is based on the high from December 28th and the high from January 30th. So you can draw that on your own chart if you want to keep an eye on it. And if we do break that, perhaps retesting it as support, I do think we could head to $2 a share. But like I said, I do think overall it looks more bearish than bullish, but we'll have to wait and see. I do think it is good to be preparing for the downsides, whether that's with stop losses or being patient, adding to positions at the key levels that stand out to you, rather than just blindly dollar cost averaging in. I think it is good to be preparing for potentially $1 a share. But yeah, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.